I think given all the uncertainties in the world economy, the last thing the Federal Reserve wants to do is to pull more money in, which should strengthen the dollar. Brian Sturgess, World Economics. The Brexit will take place in under 2 weeks, and we are currently in the last full week of trading before UK citizens vote. How do you think this will affect the markets in the coming week?
Well, as you've probably seen in the last couple of days, really, as polls are coming out, pulling the Brexit side a little bit ahead, it's causing, if I'm just looking at the sterling, it's causing weakness in sterling. And of course, as you come close to that volatility will feed through to other markets. And then right until, of course, we actually see the Brexit itself, or the remain till that's decided, then you'll see some probably continued volatility. But in fundamentals, which we look at world economics, until about a week ago, sterling was a little bit overvalued against the dollar. It's now kind of more or less in par. I'd have been 1-to-1, but I mean in terms of purchasing power parity. So if it comes down a bit, in the short term, it'd be quite good. But I would see in the longer term, Brexit and no Brexit is coming back to about a level. I mean, the level we see is kind of fundamental, is about 1.38. But it'll shoot it, with uncertainty, it'll certainly weaken below that. But I think that's the long-term fundamental level that it should come back to at some point, like I say, Brexit or no Brexit.
The US Fed's rate decision is on Wednesday, and currently the market is expecting the Fed will hold off on raising interest rates due to weak May employment numbers and tepid first quarter growth. Do you agree that the US Fed will not raise rates, and what do you think it means for the US economy?
At the minute, we do rather like the purchase managers, but we have a better forecasting system based on forecasts of surveys of sales managers, and we've seen that the second quarter of the US economy is strengthening a bit after the first quarter, but not so much that it should really make the authorities think there's any really serious need to push up the interest rates. I think given all the uncertainties in the world economy, the last thing the Federal Reserve wants to do was to pull more money in, which would strengthen the dollar. So I don't see there's going to be any particular change, given all the uncertainties in global growth, plus the Brexit decision, which we have after the 23rd. But from the US perspective, we see the economy strengthen a little bit in the second quarter.
Japan also has its interest rate decision this week, and despite pressure to remove negative interest rates, the market does not expect the Bank of Japan to change its rates. Do you think this is a wise decision?
Well, again, we look at currencies in terms of purchasing power. The yen has been rising a little bit, almost to 19% over its fundamental level. So from that perspective, any move to actually restrict money supply or ease interest rates, put them in an upward direction, would be very bad for the Japanese currency. So no, I don't see them changing the decision. If anything, we'll see more loosened monetary policy.
Thank you, Brian Sturgess. That's all from myself, Celeste Skinner. Be sure to tune in tomorrow with Sam Meredith for this week's First Commodities Corner.